thank you guys so much for being here. We're so excited for this first Q1 live stream. Welcome back, guys. So I'll go ahead and introduce myself. My name is Lexi Romano. I'm so excited to be here. I'm going to be the new host with Neighborhood Ventures. And I'm sitting here with the men who made it all happen. I'm here with Jameson Manwaring, who's the co-founder and CEO. And then I'm here with John Kabrowski, the co-founder and president of Real Estate. So I'm going to go ahead and hand it over to Jameson.
Great, thanks, Lexi. And thank you everyone for joining us today. We are excited about this new year and about all of the great things that are happening in Phoenix. And we're going to dive into all of those details. I want to start out by talking about our investor calendar. As you know, if you are receiving distributions for investments, you get those around the 15th of the month. Sometimes it's a little bit earlier than that, but we try to get them to you by the 15th of the month. And so as we look out, the January distribution will be put out by February 15th, and then the February distribution in March. Also, we will be posting the K-1s for all your investments. This is what you need to give your accountant to complete your tax returns. Those will be posted on your dashboard by March 15th. Sometimes we're able to get them out a little early. Sometimes it's March 15th because this depends on our accounting firm. And as we know, all accountants are very busy over the next several months. But you'll get it by March 15th and it will be on your dashboard. So you don't receive these through the mail. Because we're crowdfunding, we have thousands of these that are going out. So it's a big lift for us. And you'll find them right on your dashboard. You can print them, you can download them there. We're also excited that in March, we plan to do our venture on Country Club Open House. This is the hotel to apartment conversion. And the project is going great. And we want to have investors come out and see all of the progress. You've seen the videos as we've given you updates over the last several months. And we're targeting March to have the open house there. And then we already have on the calendar the Q1 distributions. If you don't have a cash account, you'll get the distributions at the end of the quarter, and that would be mid-April. And then we already have our next live stream for Q2 on April 20th. So mark your calendars for that. As a growing company, we have some great things to talk about with our team. Lexi, who just joined us and gave us a good introduction, is a new member to our team. And our team is growing. We're getting more experience. And that's really great for us as a company because it wasn't too long ago. It was just John and I looking at each other all day across the desk. So we're excited about the strength of our team. As most of you know, Rocky Peterson, who's been with us from the very, very early days, she has given a lot to our company. And she, as life changes, she's a mom with 4 young kids and is devoting a lot of time to that. And as life goes on, she's going to be stepping away from the company for a while. There may be a chance she comes and joins us again later as maybe those kids get a little older. We would love that because she has been a lot to our company. So we just want to give her a big thanks. She's been on our videos. She's helped us with design. And she'll still be a part of our company because she's invested in our projects. And we just want to tell her thank you so much for everything you've done, Rocky. And I want to introduce Lexi and some of the other team members. So Lexi is going to be helping us with our videos, with our inside look videos that we do at our projects for our investors, and also helping with investor events like this. She's already helped us in so many ways. She's a great communicator, and we can all use more of that, especially me. So I'm trying to pick up pointers from her. We also had 2 interns last year that joined us full time. One was from NAU, Jacob on the financial side, and then Grayson, who is at GCU. So we're really excited to have these folks join us full time. Local students who Jacob graduated in finance, Grayson studying entrepreneurship. They did internships with us, did a great job of the internship, and now they're with our team, and that's very exciting. And then we also added a great production analyst, Caleb Rogers, who is helping us with this live stream right now with the video. And as you know, video is a big part of the world we live in now. So we want to do a great job with all of our digital communications with investors. So Caleb's joined us full time, and we're really excited to have him as well. So the team is growing, the team is strong, and we're very excited about the folks who have joined us. Before I pass it over to John to touch on his looking ahead, we want to look back a little bit at 2021. It was definitely our busiest year as a company. We sold 3 properties. We also purchased 5 properties. The 3 properties that we sold, just under $10 million in total sales price. And then the 5 properties that we brought on, over $25 million in purchased assets, with almost 1,000 total investments over the course of the year. We're really excited that what we accomplished last year, and we're excited where that kind of positions us going forward. Each of these assets we consider it's kind of like a child, because we take it on, we spend time with it, we do renovation, and we really buy into what this asset can become. And the properties that we bought last year have already performed really well. Many of them are already cash flowing. So last year was a great year, and we want to give a shout out to our whole team and to all of you as investors who make this possible. And we look forward to a great 2022. We're in a pretty volatile world with everything that's going on. That's nothing new. And I'm very glad to be invested in real estate at this time, as we've seen what's happened with the stock market and other assets. Real estate continues to be that kind of steady stream, steady eddy. And I'm going to pass it over to John now to talk a bit about the 2022 looking ahead.
Hi, everybody. Thanks for showing up today. A lot of interesting things happening in Arizona right now in the world. Arizona last year probably was the top city in the nation for rent growth. We haven't got the full numbers in, but the preliminary numbers in are pointing to over 25% rent increases in 2021. That's amazing. So that translates to not only rent increases, income increases, but also value increases on properties. So that's why we're seeing so many good things happen here. Also makes it a little bit tougher for us to find properties, but we're finding them. We are a top 4 market as Arizona is in the country. Phoenix is a top 4 market in the country now. So think about all those other cities around the country that have always done well. We're now number 4 and growing. All the segments of real estate are doing well in Phoenix. So we talked before about the times when retail or office or industrial were not as strong. They're all killing it right now. So that's a good thing for us. Almost no vacancies, limited evictions, more units coming in on the market. I talked to our head of research at ABI Multifamily yesterday, and he told me that we have about 33,000 units in planning and delivered last year. We don't have the final numbers yet, but about 12,000 units is what we think we delivered last year. This year, we're probably looking at about the same, 12 to 14,000 units, maybe, depending on supply chain and construction, which is amazing because that's way above what we used to do. Price per unit, price per square foot, price, all real strong. And our income growth is phenomenal based, of course, on our rent growth. Then we got a lot of other good things happening. Hold on a second here. A lot of other good things happening. We've got big growth in companies. Taiwan Semiconductor, that's TWSC, they're coming in and they're expanding. Amazon just took a big space in Mesa. Of course, Intel's been building some large plants out here. We're probably going to become the semiconductor capital of the world. Pretty amazing to think about the desert being that way. And then we have some interesting projects. I don't know if you guys have seen this thing called Bell Bank Park. It's the largest sports complex in the United States, maybe going to be the world. Over 360 acres of sports complex, fields, live concert venues, all kinds of stuff. And That was a major investment for Arizona. And apparently, I think we said the first weekend, we heard the first weekend they opened 65,000 people there is what I heard. Amazing things for Arizona. So nationwide, the cities that we've seen move out of, people move out of those cities, LA, New York City, Chicago, San Francisco, same thing. We're seeing those people move to places like Phoenix, places in Texas and Florida, the Sun Belt. And Arizona's picking up the brunt of that, which is a good thing. Supply chain issues, they haven't slowed down. We're still going to have empty shelves. We're still going to have increases in wait times for materials. And for Neighborhood Ventures, we're working around that, and it's been okay. Inflation, big number. We don't know what it really is. Federal government's saying it's more than 2%. I don't know what it's going to be, but it's going to get worse, and probably going to get a lot worse with oil and gas prices based on some of the large issues we have going on with Russia and Ukraine, and potential shutdown of pipelines and diverting of fuel and oil and petroleum products to Europe to make up for what they're not getting. So look for that to hurt for a little bit longer. Federal Reserve met yesterday. They completed their meetings today, and as I heard the news just before I showed up for this webinar, and it looks like they did not raise the rates, which is surprising, but they're signaling 1 or 2, maybe 3 or 4 increases this year. So we'll see what happens, but that's their lever to combat inflation. The fact that they didn't do it, I don't know why, but they didn't do it. Hopefully it stays steady, but expect 2 or 3 increases this year. What else? Last thing, the same thing we're experiencing in Arizona, systemic employment shortages throughout the country. Restaurants are shutting down because they can't operate. Small businesses are having a hard time running. Neighborhood Ventures, we're doing very well. We got very lucky with our staff. We've been adding people, and our construction people are sticking with us and doing a great job. So I don't know where everybody went, but there's certainly a lot less people out there to fill the jobs, and I don't think that's going to change either. Jameson?
Yeah, and based on a lot of the things that John pointed out, we are glad we are in Arizona, and we're glad we are in commercial real estate. The market, I checked NASDAQ so far this year is down 12%. We have a lot of investors who are calling us asking for our next project, and it's obvious to see why real estate is much more steady because we have those consistent rents. I personally am happy that I don't have any money in the stock market. 5 years ago, I had all of my capital in the stock market, and I lived in New York too. So I'm happy to be in Arizona and fully invested in commercial real estate. And we're very excited about what's happening in Arizona. To John's point, what's happening with semiconductors and the shortage of semiconductors globally, and companies like Intel coming here to build semiconductors here in the US and focusing on Phoenix market. So the jobs are there to support the growth that we continue to see here. So as we talk about every time on these live streams, we have a life cycle for each of our projects that begins with the acquisition of the asset, then renovating the asset. Once it once the renovation gets complete, then we lease the asset up with new tenants at a higher rent, the current market rent. And once it's completely leased up, it's called being fully stabilized. Once it's fully stabilized, then the property generates cash flow. And as the property goes from stabilized to cash flow, that's when we start paying distributions to investors. And then finally, we will sell that asset once the asset has gone through the whole cycle. And that's when all of our investors get their full return. We also talk about the timeline. So anywhere from 2 to 3 years for each of our projects. So we're going to go through today and update you briefly on each of our projects, where they're at with the timeline and where they're at with the cycle. And we're going to start off with the renovation projects. There's 3 projects currently in renovation. I'm going to pass it back over to John.
Thank you. We're right in the middle of the heavy lifting over in Flagstaff, and as everybody can imagine, we also have some weather constraints, a little bit of supply logistics constraints. If you've ever done work in Flagstaff, it's difficult to get people and materials. Luckily, we've got our people going up there. But Eldon's doing really well. We've got a good portion of the units finished as far as the plumbing, electrical, and upgrades for HVAC units. We're finishing our drywall, patching things up. And the reason why we are doing all that stuff right now is because we got our permits approved and we got our walkthrough approved on the permits. So now we can button things up. Flooring is going in right now. And then we expect to have our renovations done by the end of April. We have 2 residents left in the property that are vacating in the next month, and that'll allow us to finish up the last couple of units. So if you're wondering why we only have upgrades finishing 8 units, we couldn't do repairs on units that surrounding the units are occupied. It would have been too much of a disruption, but that property is going very, very well. And as you can imagine, our rents are already going to exceed what our projections were. Venture on Broadway, a lot of good stuff going on there. Our site plans have been approved. That was a big process with the city of Tempe. Took a little bit longer than we thought. Not our fault, not something we totally anticipated, but took a little bit longer to go through the zoning process and the approval process with Tempe just because of COVID and the restrictions. The big thing is we got our permit for our drive-through, and Dunkin' Donuts is very happy with that. And our construction plans have been submitted to the city. We're hoping to get those back pretty soon and be able to start construction. First thing you'll see over there is going to be the demolition of the one out parcel, the one vacant building that we're not going to have part of it. We're going to use that for part of the drive-through lane. But that'll be we'll have some videos and showing you guys what we're doing there. And the last project we have in renovation, our big one that we've been working on, is Venture on Country Club. This has been quite a big project for us. We're renovating 120 units, including the exterior of the project. We're saying 80% completed. I probably think it's more than that, but I'll go with 80. It's we're expected to have all the renovations done by the end of February. And right now the property is distributing a 6% annually to all investors. So I've been out there. It looks beautiful. I just saw pictures of the completed common area elements, things like the gym and the pool area. They look fantastic. So we can't wait to show you guys how that looks. Jameson.
And now I'm going to transition to the projects that are cash flowing. And I will make just a note that Country Club, even though the renovation isn't totally complete, we did begin issuing disbursements to our investors, 6% a year in December. And that's because the project cash flowed so quickly. We were about, to John's point, about 80% of the way done. So there's already units that are being leased short-term, generating cash flow. And once we start generating cash flow, we send that back to investors. So even though the renovation is still ongoing, it's already cash flowing. And then we have another 3 projects that are currently cash flowing. We're excited to announce today that Venture on Williams is now 100% occupied, and we're going to be issuing disbursements for January beginning next month. So you'll get those mid-month February for the January earnings. And as you can see, the market rent is already $14.20 per unit. The current rent is already $14.20 per unit. And as we continue to lease these units, the market rent continues to climb. As I recall, when we first purchased this building, we thought it would be around $1,300 per unit. We're already well above that. And occupancy is near 100%. I think it actually is 100% occupied, but maybe that person just moved in. And so since it's now occupied, we are starting those distributions. Venture on Mountain View, we bought 1 year ago. It seems like a lot longer than that to me, but the property's been distributing cash flow 6% a year for about 6 months now. And rents there continue to be strong. Occupancy is strong. This is the property in Sunny Slope. And we're seeing all the good metrics on this 26-unit property. And you'll continue to see those distributions come out to investors. And then Venture on 19th is also running very well. This is the 41-unit building. We are adding the washer and dryer appliance in several of these units. That helps the rent move up. The rents are also moving up in this area because it's a high demand area, Central Phoenix. Occupancy is very strong and rent strong. So each of these projects, I'm very happy with the performance. Kudos to John and his team, our whole construction and property management team. We don't talk a lot about that because that's a little bit in the weeds for everybody, but the folks on the ground are really who make this happen. And John and those folks are doing a great job at managing these properties. The biggest question we've been getting from investors is if there's any place for them to invest right now. As we know, Venture Country Club is not open for investing because that's already sold out. We've already capped out our investment on that project. The only thing that is available to invest in right now is our fund, and this is only open to accredited investors. The fund currently has 4 positions, so it invests in all of our projects last year and this year. And so it has an investment in those four buildings, Venture Country Club, and the others. Skipping to the returns. So in 2021, we were paying a 2% cash distribution to the investors. And this, like our regular investment, is getting a 12% total preferred return. So the 2% that you got in cash, the other 10% is accruing, and that will be returned to investors once buildings begin to sell. Then we'll do a catch up so that you'll get that 12% in total. And we're excited to announce that in 2022, we are increasing that distribution in cash to 4%. So all of the fund investors, beginning next month, your January disbursement will be at a 4% rate. And then as we look out forward over the next few years, because this is a 5-year fund, we expect that cash will continue to increase as buildings sell. And as they sell, you'll get even more cash. We will probably sell one of the buildings in the portfolio as early as 2023. And so this is a great opportunity. If you are an accredited investor, you want to invest a chunk of cash that's currently in the market, and you want to invest in commercial real estate, you can invest in the fund currently. The great thing is your investment will go into all of our investments this year, the new projects that we do this year, and it will go into the investments we did last year. So it's a diversified portfolio, anywhere 5 to 10 total assets. Let's go back, Heidi, to that last. So this is a little bit of the time frame. We're going to be fundraising in 2021, 2022. So once we get to the end of this year, the fund will be closed. We may purchase assets as late as early 2023, but most of those will probably be completed in 2022. Those properties will be renovated, stabilized, just like we talked about before in our life cycle. And then beginning next year, we'll begin liquidating those assets. So we have about 30 folks who have invested in the fund so far. It's a great way to invest diversified. And that does lead us kind of to the next question that we've already got a lot about about when our next project will be open. I don't want to steal the thunder from our investors. I know that question is probably coming, so I'm just going to have John touch on that as we transition to open up the Q&A.
Yeah, so that's a really good question. And I want to make sure we restate what we do as a company. So the way we run things is we're always looking for projects. And over time, we're going to find good projects. We're going to find bad projects. We want to do the good ones, right? So we spend a lot of time evaluating which projects are the best for us. So at the moment, I know we've got 3 projects that I'm looking at. We looked at a retail project recently. We looked at a land project for development. We also looked at a few apartment buildings, but we're going to continue to do that. We're also going to look for the right projects for us. So be patient. We're going to find these. If 3 or 4 pop up at one time, we will talk to all you guys and we'll do 3 or 4 of them at one time. If it's one at a time, that'll happen also. So we're going to keep moving on these, and we are going to keep to our mission of finding good projects for you guys to invest in.
Thanks, guys. That was awesome. Wow, I learned so much. That was great. And we do have a couple of questions here. So I'll go ahead and start at the top from Chris. So what is the next couple of properties that you expect to sell? It's going to be for you, John.
Well, the answer is it's based on the life cycle of the project and when we think they hit their best value for us. There's a saying in real estate that pigs get fat and hogs get slaughtered. So we want to take the projects to the right level and then make sure we get our investors enough of a return, but not leave too much on the table for the next person, but leave enough. So best answer is some of the projects we bought last year, we're going to start evaluating towards the end of this year. And that's when we think we've matured them enough when they're ready to sell.
So then our next question coming from AJ, did the rezoning request get approved for Venture on Country Club? John again.
That's me again. The answer is we've actually had a lot of success with working with the city of Mesa, council members, vice mayor and mayor, and the planning department. It's an ongoing process, and I just today was reviewing our final submittal for the city of Mesa, and I think that's going to be submitted soon. And because of some of this great support from the neighborhood and from all of our investors and from downtown Mesa and the council members and mayor, it's going to be a bit of an abbreviated, accelerated process, but there's still a lot of paperwork to submit. So the answer is soon. We're very confident everything's going the right way. In the meantime, it's running very, very well as a short-term Airbnb project. So I don't know if Jameson wants to touch on that at some point, but we can talk about that. It's still doing fine.
Yeah, and I just want to mention on that process to get it rezoned, John touched on the support that we're getting from the local community. We had one person in a local meeting with the police say that the crime was down 90% at their property since we took over our property, which is down the street. So we've seen a tremendous amount of support that's kind of come organically by us just coming in, taking the property over, doing the renovation, and we have a great team of attorneys and architect working on that through the city. And to John's point, it's running great as a short-term rental. That business has come back very strong. A lot of people are coming to Arizona, so our rates, particularly in January, both our occupancy rate and our nightly rate are very strong. So we're generating good cash flow in the meantime, and it's a beautiful property now. So people really like it.
Thanks, John and Jameson. That was great. Next question from Michael. So we're asking here $100,000 for 5 years minimum on the fund. Jameson?
Yeah, so it's a great question. Hi, Michael. So the minimum investment for the fund is $50,000, and it's a 5-year fund, but the fund began last year in 2021, so we're 4 years in. So your expected time frame would be another 4 years. It may be a little less than that. We try to underpromise, overdeliver, and most folks want to get their funds back sooner rather than later. So we say 4 years, it may end up being 3 years as we liquidate the fund. But it's a great way to invest right now. And as I mentioned, you can place a chunk of funds in that and begin accruing the day that you make the investment. So you're not waiting for our next project to come up. And I'm going to sneak in, Lexi, what is the minimum investment in the fund? That's the $50,000. The one thing though, if you do a $50,000 investment and then the next month you want to put in more, you don't have to put in another 50. You could put in another 10 or 15. And we have a lot of investors who've done that as well.
That was great. Thanks, Jameson. So next we're going on to Eleonora. This question is, do you know what is the status with that bill that was not allowing investors to use their money from the IRA anymore? Jameson?
Yeah, great question, Eleonora. We had Matt Sorensen, who is the preeminent attorney in IRAs, on our podcast a few months ago. And if you're interested in IRAs and learning about some of that legislation that was passed or tried to get passed, go listen to that podcast, Kiss My Assets podcast, on all the podcast platforms. So Matt, and along with our investors, we reached out to our local congressmen and senators about this bill. They were trying to limit the ability to invest in real estate and private companies with an IRA. Thankfully, that piece of the legislation got brought out. That had a lot to do with the outreach that we did here at Neighborhood Ventures, the outreach that Matt did. He was on CNBC and a lot of media outlets. I personally wrote to our senators, and that legislation was pulled out. There were some IRA restrictions put in the legislation that was passed, but it wasn't what we thought. I think now Matt told me that the max IRA that you can have is now 10 million. So there might be a few people on our podcast that have a problem with with it only being at 10 million. But for most of us, if it's a cap of 10 million, that's not an issue.
Fantastic. Thank you both so much. John, Jameson, thank you guys very much. Thank you all for watching, for being here with us today. That was fantastic. And please do tune in again for our Q2 update in April. Thank you again. Have a great day, everyone. Bye.